go. We're starting live today, and welcome. It's LeAnn Riley, and it's my real estate investing club. And today it's pretty exciting. We're going to talk about how to adapt and prosper in an uncertain real estate COVID market. That is exciting for sure. Now I got to look at one more thing. Okay, we got some participants here. Really glad to see you today. I'm so excited. You know, it's really an uncertain time, and yet there is a lot going on in real estate. Again, I'm LeAnn Riley, and today I'm going to take you through some topics. Some things about low inventory effects, and we all know that, especially if you're trying to buy a house right now. What about how has COVID affected real estate, both buying and selling? And if we're investors, what the heck are we looking for in the future? I'm going to share some statistics so you can figure that out. What should you do? This should help. And then the big thing that we're all facing is fear. You know, there's two sides to fear, and I'm actually going to talk about that today too. And a little bit about what to do in multiple offers. So here's the thing about today. I have a short PowerPoint, so I am going to show that. And the reason is because society's problems are really complex today. Nothing we could have predicted, what we never talked about before, that's all present now in COVID. And I don't know the answers, but I have put together some research from some of all my favorite resources in real estate. And I so believe in knowledge and training to make smart decisions. When I have troubles, that's what I do. I study until I can figure out what works for me. And if you're a real estate investor, you're probably doing that too. We're trying to figure out, should we buy? Should we hold? Should we sell? What do we do right now? I'm going to give you some answers because real estate is a pathway to wealth and passive income. However, there always is a risk. And to be more confident and certain, I study the market, not only locally, but nationally, because I'm a coach and I train people all over the US on how to get started or scale a portfolio in real estate investing. So for me, confidence and then which strategy, that's what's critical as an investor. And I hope to lead the way for you as your coach in learning about real estate investing and getting started or growing a portfolio. So let's get going. And I'm going to put on my screen share here to my PowerPoint. And the reason I have that today is because there's certain statistics and things we need to look at about what's going on in real estate. So bear with me while I switch over, okay? I think I got it. Here we go. All right. Can you see my slides there, everybody? I got to get my chat box back on. Where to go? Just so I can see. All right, can you see my slides? Somebody give me a clue in the chat box. Yes, all right, here we go now. So, first thing I want a little bit of a disclaimer. You know, this is a seminar provided for educational purposes. I'm not an investment counselor or advisor, and real estate investing involves a certain degree of risk. And you're responsible for your own financial situation and your risk tolerance level at all times, along with your own due diligence. That's a big deal in real estate. I'm talking about inspections and all of the due diligence you need to do before you decide what to do with your money. You know why it's such a big deal? Real estate is big money. It's more expensive than anything you're probably going to buy. So all real estate services, no matter where you source them, are subject to market risk, and they could result in a loss in your investment. I'm not lawyer, financial advisor, accountants, or anything. Consult your professionals. Okay, I got the legal out of the way. And the other thing on this slide, this is some of my sources, just so you can, if you want to look up some of them, this is where I get my information, a lot of it. So who am I? I'm LeAnn Riley. I'm an associate broker and a realtor for Realty Group here in Minnesota. I am the leader of the Encore investment team of agents. I'm the founder of the LeAnn Riley's Virtual Real Estate Investing Club. That's where we are today. And I've been meeting with real estate investors and running this club for over 10 years. And I'm also the creator of an online training, the Proven Profit Formula coaching program of how to get started in real estate. Okay, and here's just a couple things people said about me. I'd work with LeAnn again and again. She was knowledgeable, did a lot of work to make sure everything was accurate. And I completely trust her expertise in real estate. I love that. Thank you, Courtney. And Russ, with LeAnn's coaching, he was able to see his investing blind spot, use his leverage, and get off the couch. Maybe you're one of those people, the kind that study it, watch the YouTubes, read the books, but you never get going. And he says now he has a full toolbox. He knows exactly how to invest and which strategy is the best for him. That's what everybody needs to figure out. So now let's jump into adapting to COVID and the shifts that have occurred in society. So first, I was shocked at this statistic. 83% of people are working from home. They might be going in, alternating with some people going in part-time or staggering their office work schedules. That's like a lot of people, 83%. Wow. Workplaces are being redesigned at the office for sure for social distancing, but also at home. You have got to figure out some privacy and the space in your home. People are finding that maybe it doesn't work for everyday working and living there. And people need exercise spaces at home too. That's what's showing up. You can't necessarily go places like we used to, and we've got to move around. And the third thing that's going on is there is actually more interaction in a completely new way. And that is virtual, like Zoom meetings. You know, we all know about them. It's just not in person. So we're learning to communicate. There is actually more interaction now. We're just not together in the same room, and you can get big groups on these Zoom meetings. Okay, along with that, we have families are evolving, okay? College kids that used to go off to college, they're back at home. And now mom and dad can't use the bedroom for an office, right? Younger kids are home too, and they're being homeschooled, or they're on Zoom or their tablet or whatever all the time. And, you know, we weren't planning for that. So people are needing more space in their home or more private spaces. And, you know, this is what I helped a friend of mine. She downsized out of the big house, went to the condo, the 2-bedroom condo, you know, one for her office, one for her. And now guess what? There's 2 college kids that's where they go, is home to moms, right? And, you know, now they're all in this 2-bedroom condo. It's tight. Believe me, the dining room now is a bedroom. So that can happen, and I'm seeing it, and that's why you see so many shifts going on right now in the housing. People are like, whoa, this house doesn't work, we need a different one. The other thing is, you know, your kitchens are being used differently. There's more meals. You got to make breakfast, lunch, and dinner now for everybody right there at home, and, you know, it's just, you can't go out like we used to. Good thing there's DoorDash though, right? Families are combining even to reduce expenses. If people have lost their jobs, then, you know, kids are coming home is one way, but even families are combining. People are moving to the suburbs, and that's maybe part of what you see. I know several people who sold their houses in the city and are now in the suburbs. Probably because they can. They realize now COVID has actually taught people how to work at home that never thought they could or didn't think they'd like it. And now they realize they can really live wherever you want. And actually, some people are stepping out and, they always wanted a farm or whatever. They're doing it now because they can. And the commute is, nothing right now. And even if things go back to not normal, but back to another way, people can adapt. And so what if you have to commute one day a week or something? People are simplifying their lives. Remember at the beginning of COVID, people got rid of everything, just getting rid of anything that isn't necessary. It's important to be comfortable at home. And people are adjusting to technology. Sometimes in real estate sales, I run into people that aren't tech savvy, and even to sign a document on the computer is difficult. And even those folks have been forced to order groceries, let's say. So they had to figure it out. And so there's this adjustment to technology, which is leading to more online shopping. It's also leading to, like I said, groceries delivered. And now people are like, wow, this is so convenient. I like it this way. So these are permanent behavior shifts, some of these. And this, how does that affect real estate? Well, one thing, industrial space has big demands. That would be all your warehouse space. All these groceries have to sit somewhere to get sorted and delivered. There's tons of storage needed for stock to accommodate this consumer demand. And you guys have all seen it, all the Prime trucks out there, the Amazon trucks, and just the postage, UPS trucks. All the deliveries are amazing. And there needs to be some more safety equipment around all of that. So that's affecting real estate. Okay, now the other big thing, if you have any investment property, is the eviction moratorium. The CDC order, okay, that came into effect on September 4th, and it's through December 31st right now. And it applies to all rental units. There's an eviction moratorium on. And if the tenant cannot pay or needs help, a renter must sign a declaration if they're not paying the rent, and it has some guidelines. But the note here I really want you people to understand is that the state moratoriums may override the CDC order, and you really need to check with your own state rules. For example, Minnesota, we override it, unless our state one goes away. So you really need to check into that. Okay, and that resident declaration, if they can't pay the rent, here's where there's help available. They need to make less than $99,000 per person, or $198,000 if it's a couple. They have to have used their best efforts to get rental assistance or housing assistance. They need to be unable to pay due to loss of income, wages, or medical bills. And it doesn't have to be COVID related. And if evicted, they'd actually have to go to a homeless shelter or crowded housing. There's just nowhere for them to go. Then they can make this declaration and, you can't evict them. Actually, with the eviction moratorium, you can't evict anybody right now, but this is a protective class, let's call it. Now, what can the landlord do? Because I work with a lot of property owners, landlords, right? Well, what you should do is charge late fees, penalties, and interest per the terms of the lease. Even if they can't pay them, you need to go ahead and make a request for the rent payments that are due and enter into a repayment agreement with the tenant during the moratorium. Maybe they can pay half the rent, maybe they can pay 3/4. Work on something with them, make clear, though, in writing the amount due and the terms for repayment. And the reason you want to do this, because this is going to be useful for enforcement when the moratorium ends. You've got to have a paper trail, okay? The other thing, one other thing I've been asked many times, what about a holdover? Someone had the lease expired. Does that mean we can't make them move? And, you know, actually I ran into this on a house I sold, and with lawyers involved, yeah, it kind of does mean that. Now you can ask them to move and you can incentivize them to move. And that is what happened. And our person moved and the new person got to buy the house. So that was great. The tenant moved. But it's not clear in the moratorium order here in the state of Minnesota. So you do have to check with legal people. Check your local laws. Okay, so here's the best option as a landlord. Had to get a drink. Okay, you want to send your tenant to, there's many state programs and county programs from the CARES Act or the HEROES program. There's programs out there. I've seen a ton of them here in Minnesota. And if a tenant is having trouble, make sure as a landlord, you give them the information so that they can go apply for help. And that is humongous. Besides this, here's what the eviction moratorium says. You cannot evict, you can evict, I was wrong. You can evict them for if there's criminal activity in your unit, that overrides it, and you can actually evict someone in the normal court proceedings. If it's threatening the health and safety of other residents, if they're damaging or posing a risk to your property, if they're violating any building codes, health ordinance, and that one's tricky because building code, if two families had to combine and you're over occupying, that's a fire code violation. So it's really tricky right now. Again, you got to check with your legal. Or if they're violating any other contractual obligation, and again, that could be over occupancy. So you really need to pay attention. It's not going to be easy if you have to evict someone right now. So the solution for this is to get rental assistance, and there, like I said, check with your county or your city programs. There's the HEROES Act. This is some stimulus money they gave out here to help people, and that has made a big difference. Far fewer people are in such dire straits. So let's see here. The best policy is to communicate with your residents, and be sure you put signs and posters up in your laundry areas too about social distancing. That's your responsibility as a landlord. So now I bet you're wondering what's happening right now in the data real estate wise. So I went to the NAR, the National Association of Realtors. And actually, this is October numbers, and we're just only 11 days into November. Pending home sales are up 22% from 1 year ago. That's that darn low inventory. Things are happening out there, guys. Listings are up 5% year over year. That's pretty big too. 9 new contracts pending for every 10 listings. Things are flying off the market, believe me. Multiple offers are crazy. And if you don't have a really good agent who is experienced in multiple offers and that can help guide you through the process, it is tough. And where I see it really tough is down on the low end of the market. If you're trying to buy a house under 200,000 here in Minnesota, it's the lower end of whatever market you're in. It's tough. The competition is so stiff, in 2-3 days, you'll get 15, 20 offers. So it's hard to win in that. particularly if you're on some sort of subsidized program where you have down payment assistance and you need seller paid closing costs. It's just about impossible unless you have a really good agent who knows some tactics or can find some off market things. Let's see, residential construction spending is up 9% from a year ago. If you drive around, you notice all the building, right? We need this to increase the housing supply and cool down the price growth. We've got to be having this new construction. That's going to help. That's the only thing that's going to help this low inventory. Well, one of the things. All right, what else did they say? Mortgage rates. Well, we're loving that right now, aren't we? They rose to 2.81% for the week ending October 30th. This is the key thing that I saw. That is a historic 50-year low. Like, really take a minute, and isn't that amazing? 50-year low. One more thing I want to start. If you do get a question, you can go ahead and put it in the chat box, but I won't be answering all the questions until after I finish the PowerPoint, okay? And there's going to be plenty of time here at the end for questions. Let's see here. I love this next statistic too. The average mortgage payment is $1,048, and that fell below the median rent of $1,161. That hasn't happened for a long time either. So no wonder all those first-time buyers or people who are renting, if you're paying over that in rent, it's like, wow, why not buy? And at these mortgage rates. So it's just, that is where the flurry of activity is coming. And then the low inventory, because it's not that people were afraid to put their houses on the market here after the first few months of COVID, but it's just been, it was already a low inventory market. And it takes a long time to heal something like that. So it's going to remain that way for a while. And then there's a lot of people who couldn't pay their mortgage payments here when this happened and they lost their jobs. So then the forbearance came out, and forbearance loans continue to decline. This is good news. They're down now to 5.83% of the loans. That's 2.9 million homeowners in forbearance plans. Now, this is good news that it's going down, as it's less likely of real foreclosures to happen. And if foreclosures start happening, then the prices and the values of real estate go down, and we don't really want that. So the unemployment rate in September, just incidentally, was 7.9%, and that's up from 3.5% in February 2020. So see the result of the virus. But fewer people are applying now for unemployment. For the last 7 weeks, the claims have been going down. So that's good news too. I notice many folks that I know who lost their jobs. There's a shift now, and people are being maybe changing careers, being a little more resourceful. There's been enough time off that it's not all vacation, you know. It gets boring after a while. And people are, my son's a great example. You know, he was off, but he has now started his own business. That's a great example. I notice it's pushing people to entrepreneurial activities. Okay, and one more thing I want to say, maybe it's on the next slide. Now, it's the forbearance. I want to say something about, you know, I've had people from early summer come to me and say, okay, when's these foreclosures going to happen? You heard that? So those of you who are waiting for the big dip in the foreclosures to find good deals, guess what? It's not happening now. And let me tell you why. What you need to realize is, yes, there will be some foreclosures. A lot of them are mitigated because of the stimulus and the forbearance loans. Most of these forbearance loans, or a good share of them, they're just, you know, maybe they missed 4 or 5 payments or something. They're tacking that on to the end versus foreclosing on the house, okay? That's going to help a lot. People can stay in their homes. And for those that they're going to move forward on, here's the issue. It takes time. The courts are way backed up already. And every state has different foreclosure rules, but like here in Minnesota, it takes a year, 6 months before the sheriff's sale and 6 more months before an actual foreclosure occurs. So now take 1 year and then add all the time it's going to take to get to the court. And guess what? It's going to be 2022 before we see this big dip that could or might not come. Okay. So I guess what I'm trying to say is don't be, okay, fine, wait till 2022 to buy, but there's a lot of things going on. And what I always say, there's a good deal always. I don't care what's going on with the market. The issue is you don't know, a lot of people don't know how to spot a good deal. That's the skill you got to learn. You need to know the difference between a good deal and a bad deal. So the big thing I see happening is that 2020 is different from the norm. And this is where I want to just talk about fear for a second, because I'm hearing and seeing a lot of fear, right? There's the fear of, should I move now or should I move later? It might get less expensive if I wait, but the prices are going up. So then that creates people to just stay where they are and not do anything. Or there's the fear of missing out. What if I buy now and I move and it's too early and then the price dips, in 6 months, I'll be mad at myself or whatever. But then here's the thing, the truth is you can buy more house right now with the super low interest rates. That's important. 2020 is running different from the norm too, because generally in election years, real estate doesn't appreciate as high. It's usually, it's about 2% in election years because people are concerned and they fear the policy changes. So they hold off. And so that's why it doesn't quite appreciate. And now with the coronavirus, though, this year was completely different. There was no slowdown, maybe about 6 weeks there. There actually is an acceleration in sales if you look last year to this year. Now, that is shocking, right? We are up in sales, and I can tell you, I have been busy. That's a good thing. And that's a lot of multifamily action going on. And just so you know, we're in November here. November and December are usually 10% down because of seasonality. This is nationally, with a 15% drop in election years. We're not seeing that this year. That's all different than the norm, right? Now, one of my favorite researchers is a guy named Neil Bawa, and he runs Multifamily University, and this is his, we know things aren't finalized in the presidential race, but let's take a look at what Neil Bawa says if the Biden administration takes over. These are the changes that he read through all the papers and everything, and this is what the changes are expected. The 1031 exchanges will be limited, and I know a lot of people are worried about that. The 1031 exchange is when you sell a piece of property and you can avoid the capital gains by purchasing another like-kind property with they call it the boot, with the money, basically. There's a lot of rules around that, but here's the thing. He's going to drastically limit the exchanges to those people making under $400,000 a year in order to collect more taxes for child and senior care. That's what the proposal really is. And as you all know, none of this is happening right now. But this is why right now already I've been seeing a ton of activity in the 1031 world. People selling their apartment buildings and trying to buy something else before it goes away. But now, the thing is, things take time to pass, right? This will take at least a year to be enacted. So you don't have to rush and sell your property immediately and find the next one. There's some time. Okay. The next thing is the proposal is to direct grants to homeowners up to $15,000 down payment assistance. This is to stimulate affordability for housing. So that's a good thing. Opportunity zones, that's certain zoned areas where if you develop there, there's incentives. So the purpose of them is to reform disclosures on housing affordability, poverty, and job creation. That's why they created opportunity zones. You'll see them in cities, in big cities. And there's, like, you can go to Minnesota and there on the internet, any state, and there's a map of where the opportunity zones are, and there's tax incentives. Fair housing, he's going to work on eliminate housing discrimination. Bigger stimulus package. And what that does is promote economic growth. So 21 and 22 to 2022, you're going to see growth. I like that. It's short-term growth economically, but it will cause a surge in real estate sales in the next couple of years. Cap gains rates are going from 21 to 28% for the wealthy. That's why they want 1031s. And the thing is, moratoriums are tied to the vaccine. An extension may happen, or it may not happen if there's a vaccine. We don't know, okay? But it is tied to the vaccine. That's okay. So what are we going to see here looking forward in property values? This is interesting because I can explain some of this. The values are expected to go up in industrial because that's that storage space we need. Self-storage, people have to put their stuff somewhere to make room for the office. They can't have that extra bedroom full of stuff. Apartments values are going up, and senior housing. Okay, that goes along with the just the general aging of the population. The value is expected to go down. We're not surprised here. First, it's the hotels. Well, we all know why, right? Nobody's staying at them. They sure suffered. Retail is suffering and office is suffering. People are, can't afford their office space now, or have realized they don't need it, or they don't need as big of a space. So all of that is going down. This came from Marcus and Millichap, their latest survey. Here's another thing in the multifamily world. Apartment rent payments are trending better than inspected. They've been pretty good, close to 95% during these initial stages of the health crisis. And the reason why, the stimulus package. This could change though, right? That's the big question. I got a frog in my throat. I'm not used to talking this long. So whether or not it will be replaced with a new aid package is the big variable that could influence this if the rent's paid on time. But this is way better than we were expecting. And I love this chart because look at a year ago, I mean, it has barely changed. The blue is 2019 and the orange is 2020. So the full recovery from the 2020 crisis and the recession, this is a great one. When do you think this is going to happen? So they did a poll, and it looks like the vote there is by 2022. This is what the majority thought. This is a great question. When do you think it will be? Dean, somebody gave us a question on that last slide. Let's look. Looks like the numbers in 2020 are lower. Obviously they collected less rent in 2020 than in 2019. That's what this chart is. The rent payments are lower now because, some people can't afford their apartment, but they're not, it's not like halfway down or anything. It's pretty dang close, right? Really close, actually. All right, so I want to wrap this up today with talking about successful real estate investors. These 4 guiding principles, Chris Clothier, he owns Memphis Invest. He writes good articles. Here's the guiding principles. Buy and hold is the best because that leads to the passive income. Take your time, mind your market, and leverage for success. Investors have a lot of access to capital right now, and therefore they can increase their holdings, and there's a lot of confidence in the interest rates, and they're going to stay low in the near term. In the next year or so, nothing's going to jump way up there. Heck, I bought buildings when the rate was 18%, so I'm just blown away by 2.75 or whatever it is. People believe in real estate and the long-term nature of this asset class. It's really great for building that wealth. And yes, there's been a lot of uncertainty in these last 6 months, but when you look a year or 2 or 5 years ahead, it's really a short-term phenomenon. There's still confidence in real estate. The other thing about those mortgage rates, they have spurred huge refi activities. So if you're buying a house or selling a house right now, it's taking a little bit longer. Title companies and mortgage companies are busy. Let's put it that way. So let's go here to why is buy and hold the best? Okay, because the real estate market moves in cycles. And if you do a shorter term strategy, you're beholden to that cycle like a flipper. They need to time the market just right to maximize their profits. And sometimes the flip takes too long and then they miss the window. Or for us here in the northern climates, like you don't want to put your house on the market right in the dead of the winter when people don't even want to go outside, right? Those kind of things matter. So in buy and hold, it's a longer time, so a winter won't make a difference. You're building a portfolio that grows your equity over time. And what that's about is that monthly cash flow. Lots of investors hold their properties for decades. Why do they do that? Because the tenant is paying that mortgage down, right? They're making cash flow above, that's the last one. You gain monthly cash flow while growing your equity. Couple of things are happening. Hopefully the natural appreciation, maybe you do a little bit of renovation and raise the value, and this dwindling mortgage demand. That creates lasting wealth in an industry known for its reliability. That's why you want to buy and hold. The goal is get that building paid off, you retire, and you've got money coming in to replace your job income or supplement your retirement. There it is. My brother did it. That's who taught me how. Whoops. Okay, and the second, I like this principle too. Take your time. You don't have to be in a rush because you need to make smart decisions. It is true. The more diverse your portfolio is, and the more properties you own, the more wealth you'll have. That's true. But you need to add the right properties to your portfolio, not just anything that comes your way. So you need to be mindful and intentional in how and when you scale your portfolio. It's a calculated thing based on the market. I always say to people, buy low, sell high. And if you look at the market right now, if you're a seller, now is your window. But that can backfire if you're selling your own personal home. Yeah, you'll sell high, but guess what? You're going to pay a little bit more on the other side when you're buying right now. Now, ideally, if you went and rented somewhere for a couple of years or until the right time, you could probably bank quite a bit of money. And I know people doing that. The second thing, assess your resources and move on when you're comfortable doing so. What I'm talking about here is, I know I did it. I used my credit card on the first property I bought to pay the closing costs. Like I was that tight. Now, I'm sort of a risk taker in that sense, or I wouldn't be where I am, but you really need to prepare and have it figured out. So that's what this one is about. And then be comfortable, but don't be stuck. That's the darn fear. Then you'll never, ever get to passive income. Don't give in to pressure to jump on the next big thing. Your buddy, somebody tells you, hey, I found this great, whatever it is. That's good, but do your research, okay? Just check it out. Because that's the thing about real estate. Once your money is in, it's not like a stock. You can't sell it tomorrow, right? A stock, you can change your mind tomorrow. And the last one, have goals, but don't stretch beyond what you can handle. And if you found something bigger than that, then you best find a partner or someone to, do it with. The third item here is to mind your market. You've all heard the location. Well, that's the first one. The location is actually your market. Where are you investing? It really makes a big difference in influence over your success because different things happen in different markets. And you might be great at one thing, but then if you jump to another market, it might be different there. It's better to really understand. Like take California people, for example. It's so expensive. If you buy a duplex or a 4-unit, you don't really get any cash flow because it's so expensive. Many California investors are investing in the Midwest or the South, different places where the numbers work. So you need to go to target markets that are poised for long-term growth. Study the numbers. This is why I like my guy, Neil Bawa. They call him the mad scientist of multifamily. He's a data geek, but I love that. I know the data geeks here in Minnesota too. I love that. That's how I feel safe recommending something or, buying things myself. When I could line up the data with my principal, then I knew. Evaluate the growth. This is the data I'm talking about. You got to study the economics, the population, the property values, and the rental demand. All those got to line up to make it work. You have to invest where it makes sense. I always say you need to look for somewhere with some sort of growth coming up. Like here in Minnesota is a great one. They have something called the DMC, the Destination Medical Corridor. It's between the Twin Cities and Rochester with the Mayo Clinic. And there's, I can never remember this number. There's a gabillion dollars, I can't remember the exact number, of money being put into that area over the next 20 years. So my smell test says, well, oh, that's interesting, right? That covers for me something to perk me up and go, wow, buy now in those areas where the prices are really low and you'll be setting yourself up for a big boom. That's the kind of thing I'm talking about, where it makes sense. Look for markets with proven stability and growth. And then the last thing is to leverage for success. And time and experience are leverageable assets. That's the third one down. Leverage is when you're using other people's money. You've all heard of it, OPM. But use it wisely because that allows you to quicker scale and grow your equity because it's not your money. And money isn't the only thing real estate investors can leverage. You got to leverage your time and your experience. And for some people, you're working a busy 9 to 5 job or any hours you want right now, but you get the work done, right? But you don't have time. You got young kids at home and all sorts of other things. Maybe you still want to invest. Then turnkey investment companies, they might be what's right for you at this time. And later you can do it yourself or whatever. Everybody has to choose, but don't forget, time and experience are super important here. And then the last one is leverage to become a passive investor, or if you want to minimize your risk. That's what leverage is about. Work with people who know the business. Build a team if you don't have time. That's, what our team specializes in, investment property. And a lot of realtors don't know investment property. I got a whole YouTube video about that. And the last one is, I want to leave you with today is, yes, we're all living in a new time and uncertainty, right? So you need to move forward with confidence and certainty. We are where we are. And I have my 7 secrets to a wealthy mindset, and that's where this comes from. So first, when it comes to fear, we need to face our fears directly. We need to acknowledge the fear of failure and do it anyway. Sometimes we just have to push ourselves a little. Otherwise, we're never going to reach our dreams. And the big one, I think here, this last one, is ask for help. Even me, the way that I work now, I used to have an assistant who came to my office, and it was easy to ask for help when she was sitting right next to me. And now it's all Zoom, and it's a lot harder. And I found myself doing a whole bunch more. And then I had to reevaluate that. In real estate, you need to ask for help. I'm always asking for help, even now on deals that there's something new all the time, believe me. Confidence. Recognize your value, your strengths, and your gifts. We all need to take time for that personally, to recognize it. Invest in yourself, but get it. And you know how you do that? You training and, invest in experts, in the education, in the training and mentors and coaching. I've been doing it for years, and you need to do it to get to the goal faster. And you don't have to learn everything at real estate investing, but if you find somebody who knows more than you, that gets you there faster. And then certainty. You really need to believe in yourself. You can do this. And be open to learning new ways to build and prosper. And that's what COVID has really taught all of us. We need to learn new ways to live, right down to the ordering the groceries a different way. So thank you so much for sticking with me here. And now I am going to be open to questions and answers. I see my trusted support put in the references here in the chat box of these different people that I got my data from. So go ahead and anybody put a question here in the chat box and I'll answer it. Okay, I'm going to stop my screen share. There you go, guys. You get me. Hi, here to answer any real estate investing question or anything about the presentation. I see a lot of people on here. Somebody's got to have a question. Nobody. Crickets. I got crickets out there. Let's see. We got 10 minutes left. Okay. Let me see. What do I want to talk about? Okay, I'll talk about, give me a minute here. I'll find something here. Come on, somebody with a question. I know you have them. All right. Somebody wants to know about the Proven Profit Formula coaching program. You know what? It's the 7 steps that it takes to be educated as an investor, and it's in the proper sequence so that you can learn first how to leverage, then work on your wealthy mindset. Step 3 is how to tell that good deal from the bad deal with cold, hard math. And something I want to say about that is, like, when I look on the MLS, you know, I'm versed in this. Like, I just looked at listings 2 days ago, just looking at somebody's search, and boom, I spotted 2 really good deals, just like that. Like, because I'm trained, but I train you how to do that. And then I train you how to, if you're going to property manage, then you better do this. If somebody else is property managing, then do that. All the different things that you need, all the way into figuring out your personal strategy and your blueprint so that you can be a real estate investor and do it the quickest, easiest way. Okay, I see somebody put something in the Q&A. Okay, great, different spot, but I got it. How do the current interest rates impact investors? Well, the current interest rates are so great. They help a lot. I mean, I've seen people close on some pretty big projects, you know, under 5%, because obviously when you're buying your own residential home, the interest rate you can get under 3% if you have good credit and everything else. But in the commercial, if you're buying something larger that you're not going to live in, you're going to be a little bit higher, but you're still, you know, I've even seen some of that in the 3% on a duplex, but otherwise closer to 5%. That's like killer rates. That's it's not free money, but boy, it's cheap. So that is helping people. Actually, these lower interest rates, you can buy a more expensive house and have the same payment that you would have had if you know, it helps balance it out. Let's see, is there another? Okay, anybody else got another question? Oh, here we go. Oh, somebody wants information on options for structuring a partnership. That's a tricky one, Tim, because here's what I say about partnerships. Yes, you need an LLC. Yes, you need a partnership agreement. You need a buy-sell agreement. You need what that means is if somebody wants out, how's that going to work? Like, I used to own a business with my sister. And that, my dad taught me this. That was the first thing when my sister joined the business, because I was there before her. Right away, we went and got that all handled, because if one wants to leave, what's going to happen? Or if one dies, what's going to happen? This is, I say partnership is like getting married. You better know, like, and trust that person. I've seen a gazillion partnerships go bad, but I've seen some be really successful. And it has that characteristic. You know the guy like a brother, or the lady, you know, like, and trust. Super important. The information to answer your questions on the options, you can certainly Google and YouTube stuff and get enough information to go to a lawyer in your state, wherever you're buying this real estate, or, you know, where you all are. Make sure you stick with those rules, and then they should be able to help you put that all together. And it depends. Partnerships are run different ways. You've got to be very clear on who's doing what. Say you're doing a fix and flip partnership. That can get muddy quick. It gets muddy over the who's doing what, who's doing the actual fixing, who's putting up the money. You know, you got to get very clear. And if that's all in the agreement, it's easy to sort things out. If it's not in the agreement, it's not easy. I once had don't laugh, guys. This was a how to dance country western video business back in the days of the achy breaky. I don't know, that was in the 90s sometime. And I had a partner. He was the videographer. I found all the dancers and knew all the dancing part because I owned a dance magazine. He knew all the video part. So we partnered and we had clear agreements, and we had a big wave and then we went down, and luckily we had clear agreements and we all came out okay. That's what's important in any partnership. You might have to meet the person and look them in the eye, and you know, that's what it's all about, is everybody coming out okay at the end. All right, let's see, what do I want to say here at the very end? Let me see if I have look at my regular wrap up here. The main thing, I guess, I go live once a month, the second Wednesday of the month. I've got a great guy next month. His name is Tim, and he is going to talk to us about how he, you know, he's a solo investor, and he's going to kind of tell us his story. And he's over 50 units now, and how did he do that, and what strategy did he use? So I'm really interested to chat with him, and let's get the scoop on that. So join me again. If you're not a member of the LeAnn Riley Real Estate Investing Club, Jeannie, can you put a link over there in case someone wants to make sure, hopefully if you got on this webinar, you already had to join. Anybody can join, it's free. And really it's just a way to tap into the education that I put out there all the time. Another thing, go check out my YouTube channel, leannriley.com. And the YouTube channel, lots of education on there for real estate investors. So thank you so much for coming today. Look forward to chatting with any of you guys, and be sure, if you're looking for real estate to buy or sell in the Twin Cities market, our team would be happy to help you. And if you're national or want to learn how, go to my website and you can get all the info. So thank you, everybody. Okay, there you go. She gave you a couple links in the chat box to, you can, yeah. And you know what, if you are thinking about buying and selling or the proven profit formula, you can schedule a free strategy session with me with that link right there, and we can just chat about it. All right, have a great day. See ya.